Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so here we got the Bitcoin chart, but before we get into it, I want to take a look at the futures chart. We closed on Friday just above 18,000, right around like 18,150. So with that price action over the weekend, pumping us up over 19.4 basically. Futures opened back up at like 19.2. And then got a slight pump after that and left this massive gap. So we now have over $1,000 gap in between where futures closed and price action continued on and then reopened just now. So essentially what we're looking at is $1,000 that tends to get filled. And now people always talk about why gaps get filled and they don't seem to understand it. We've talked about this before, but we do have a lot of new people. So I'm going to go over that real quick. And essentially all it comes down to is it's just a market agreeing. You have part of the market open and part of the market closed. So now what you need to do is come to an agreement between those two markets. So essentially what happens is you typically come back to fill the gap because you don't want to have like an open price action left like unattended to there. So essentially like the two markets are kind of in disagreement. One of them was closed, futures, while the other one continued to run up. So then when futures opens, all of a sudden, a lot of times what happens is the gap will get closed down here to fill where it closed at. And then from then you can have agreement between the market as to what the actual price should be. And we can continue to move up from there or continue to move down from there. But a lot of times, essentially what happens is there's less liquidity, there's less money taken to move the markets because part of the market is closed. So then only part of the people are voting on what the price should be. So if you have, say, 50% of the market open and 50% of the market closed, half the market decides what's going to happen over the weekend. The other half doesn't get a say in it. So now all of a sudden, both markets are back open. Everybody gets a say. So now they re-vote on what the price should actually be. And they vote with their money. So that corresponds to price action. If all of a sudden you close at 18,200 and then price jumps up to 19,200, you might say, well, I'm selling. That's great. And I think now we're overvalued. So you'll start to see that gap close back down. And then if we get down to here and it gets bought back up or sometimes slightly above it and gets bought back up, it means people are agreeing that we're in fact above that price and that, you know, we're not overvalued. But if price sells down to here, closes the gap, and then we continue down, that's essentially the market saying like, well, that's overvalued. I'm going to sell into that extra price action. I'm going to sell into that pump that happened over the weekend when I didn't get a chance to sell or I didn't get a chance to buy. So that's essentially what's happening. It's the agreement of the market on what the actual price should be. And then what happens is people, you know, back up their votes with their dollars. So we'll see now, is that going to get closed now? Are we going to get a pushback down to 18.2 or 18.3 or 18.4 and then find support and bounce back up? Are we going to keep running and get a breakaway gap, which is very, very unlikely? Or are we going to come back down here and then continue to sell off? So let's talk about that now. So we have this $1,000 gap, which is very likely to get filled because essentially everybody's going to vote now on what the price should be over the next, like, you know, a couple hours or day or whatever. So now let's switch over to spot here. So we previously had a high right here, a lower high right here, and then a lower high right here. That's bearish divergence because we had a low high on price, a medium high on price, and a high high on price. And then when we got the divergence played out, 3 drives of bearish divergence played out, we got a massive dump. Okay? So now here we moved up and we put in a high here, we put in a high here, that's fine. But then the next high after that right here was a high, and then we had this high right here and this high right here. And then the next high after that was lower on price action. It was lower on the indicator oscillator. And then the third one here was over the weekend. We got this third drive, and this one closed just slightly below this one, but the indicator was substantially higher. So now again we have a high, a lower high, a lowest high. And then we have a low on the oscillator, a medium on the oscillator, and then a high on the oscillator. So that's once again 3 drives of bearish divergence. So we need to be very careful for that to play out. But over the weekend what we saw was the opposite. We saw bullish divergence. So we came down here, got that first push, and touched almost the 200 simple moving average, in which I said we're going to get another push down to the 200 exponential moving average right here in bright blue, and we're going to look for bullish divergence to develop. So what that is that's a low on price, that's a lower low on price, and then here on the indicator oscillator, we got a low on price, and then we got a higher low on price. So what that is it took a little energy to get us down, or a lot of energy to get us down here to a low, and then it took less energy, way less energy, to get price action way lower here on a close. So what that is it means we're running out of steam in that direction, and then we got this reflex rally up. So what we were looking at was we were forming a neckline basically right here for a double bottom. We got the break of the neckline double bottom and the measure move up, back up to the top here. And where did that measure move take us to? From our top right here to our bottom right here. We drew our Fibonacci from top to bottom in purple right here, and you'll see we got a push up. We thought it might top out at the 618, but as long as it topped out under the 786, we were going to develop this bearish divergence. So we did. We topped out under the 786, touched it perfectly, and then started to sell off. But we closed right here as the highest high, and here we had a higher high on price action, but again, did not correspond with our divergence on the indicator oscillator. We had a lower close here on the price action. We had a higher close here on the oscillator. So now we have, once again, a low, a medium, and a high. And then we have a high, a medium, and a low. So again, that's bearish divergence. So you see how powerful the bullish divergence was to take us back up to the 786. Now what we're expecting is the bearish divergence to play out. Last time that bearish divergence played out, it took us from 19.4 down to 16.4. So that was a $3,000 move for the bearish divergence when it played out. So if right now we're back at 19.3, again, we could get a $3,000 move, which would take us back down to like 16,000. So that's what we're paying attention to for, is a very aggressive move to the downside. And now here we have, once again, like we always talk about, two red histograms, okay? And then we have right here the bullish accumulation, or bullish control zone. And then we just got the hard sell, and we're getting ready to exit out of the bullish control zone. So if we continue to sell off now below that 80 line right here, we're going to lose this red highlight, and then we're going to get the hard sell out of the bullish control zone. We're going to get the crossover on the RSI and the EMA of the RSI. We're going to get this sell back down here, and then that would be our bearish divergence playing out. And then essentially we had formed this triangle right here. We broke out of the top of the triangle. We're holding the top of the triangle currently. A lot of times that's our slingshot we were talking about, where you pull the price in one direction and then you shoot it in the correct direction, the direction that your trend is actually headed in. But you use this breakout right here to get people to buy into the market, to get liquidity or solvency in the market, to get people interested in price action. You have to break through this descending trend line right here. So that's what we did. The same way we did right here. We came down to the trend line, touched it, broke through the bottom, and then we used it to rocket back up to the top. Now we're doing the same thing. We have 1, 2, 3 touches. We get a fourth touch, break through, find support, and then we rocket down to the bottom. So that's what I'm expecting now, is a violent sell-off back down out of this area and take out this previous low of the retracement from our all-time, I shouldn't say all-time, but for this run, our high right there of 17,570. Where is that going to take us down to? My first target will be, again, the 200 moving averages, but the 236 right here at 16,825 is my primary target. And what that is from our bottom that we put in back down here at 10,000 when we sold back off to the top. That's our Fibonacci move. And that would be the 236, implying that this wave is over once we come down to the 236, and then we could get one more push back up, rejection off the 200 moving average, and then I would expect either the 377 or the 528. So my next target after that would be 15,157. Now in the event that we get a violent sell-off and come all the way down to 13,512, that is going to take us all the way back down to the 236 of the macro move, which is from way back in March. That macro is going to be our $3,800 price that we sold down to, the absolute low. So from the absolute low to the absolute high of this move right here over the last, whatever it is, 8 months at this point in time, the 236 from there would be in line with the 0.5 and the 618. So if this is a bullish trend and it's going to continue on, we could come down as low or in the region of 13,000 and then continue on. We could get a push down as low as 10,500 and continue on. Or if this is going to be a bullish move and get continuation to the upside, the furthest I would like to see it come down to is 8,773. But in the event it came down as low as 7,200, we could still say it's bullish. We just got a heavy retrace down to the 618. But if we come down anywhere as low as 10,635, I will be looking at as a hard buy area. It's going to correspond with our first top of the waves of this entire pattern up here. Okay, we got a pullback, and then we continue on to wave 3. So if you want to say this is wave 1, that was wave 2, this is wave 3, wave 4 could come all the way back down to the 382 right here, and then continue on to the upside. We don't want to see it come any lower than that 10,593 range if this is going to be a legitimate Elliott wave. 1, 2, 3, 4 would be the retracement back down to here, and then 5 would be another wave up to the upside that could possibly take us, that would most likely take us to an all-time high on Bitcoin. And that would be an amazing buy opportunity, after which we would expect the entire wave structure to retrace. But for right now, that's what we're really paying attention to. Now, in the event that we do get this pullback right here, and then it comes down to the 382, that's going to line up the 886 of the blue. So that's going to be an 88.6% retracement of the blue. Now, is that likely to happen? It could happen. It might not happen, but that's what we're paying attention to. We're setting the criteria out ahead of time so that if and when that move does happen, we're ready for it, okay? So now we were talking about bullish and bearish divergence. Let's pay attention to now what's going on the daily, okay? This is key right here. We got that move all the way up. We have a ton of energy used on the histogram right here, on the TJD TD MACD, and on the Stoch slope right here as well. Ton of energy got us all the way up to this area right here. And it corresponds with this high right here, okay? And then we sold back off, found temporary support on the slope line, and then we got this little itty bitty move up right here, okay? This little itty move up right here, but we get a higher high out of it. So we have a lower high on the oscillator and indicators, but we have a higher high on price action. So once again, we're looking at bearish divergence off of the top here. Now, are we going to get 1, 2, and then a third drive of bearish divergence? It's very, very likely to happen. We could easily find support right here, get a push up and close anywhere above 19.9, touch that 20,000 mark, and then as soon as we do, that would give us 1, 2, 3 drives of bearish divergence, and then once again, 1, 2, 3 drives of bearish divergence. Now, do we need that to top out this trend? No. It could potentially top out right now and sell back off. But is it likely? Is it possible? Is that one of the best and most reliable indicators to ever happen? Yes, it is. And that is probably one of the best sell signals you'll ever get in these markets. Now, this is not financial advice. I'm not your financial advisor. But that is like top level thing that I look out for. And that would correspond with basically us getting a move up here and then selling off. Will give us the 821 cross to the downside, take out the parabolic SAR, 3 drives of bearish divergence on both of our indicator oscillators, and that would take us out of this area with a hard sell on the daily. Now let's switch over to the weekly as well. Here's our weekly. We are in the bullish control zone. We are at a very high level on the TJD TD MACD. Okay, so the likelihood that we could potentially sell off, take out the parabolic SAR, and then start retesting these previous levels, that would take us down to 14,000 for the 21. The 50-55 would be in like that $11,000 range. But if we came all the way down to the 200 moving average, that could be as low as like 7,900. Now look what happened on our previous main sell-offs. We got our high, we came down to the 200 moving averages. Got our next high, came down to the 200 moving averages. Got our next high potentially, came down to the 200 moving averages. That would be a key area that we would want to buy into this market for a potential long-term uptrend move. Okay, we did all the criteria that we've asked for. We took out the previous high. We've taken out the all-time high. We've gotten closes on the daily, the weekly, and if I'm not mistaken now, the monthly, higher than we've ever seen in the past. We have all our moving averages splayed up in the correct direction. So the next thing we want is a legitimate retrace. And then from that, we call this a bullish trend. We call it a bull market. And then we look for accumulation zones. And the best place to ever accumulate is off of that 200 moving average. So the 200 moving average on the weekly previously was that 3,200 range. Best buy you could get. The 200 moving average previously on the March dump, well, close-wise was the best you could get, 5,300. But we did come down as low as like 3,800. But essentially, you know, buying that close off of the 200 moving average would have yielded you amazing profits through this area. Almost, I think it's like a 4x basically. So once again, if we sell back off, even if we came down and you bought in at 8,000 that's like the area that I would be looking to legitimately accumulate this asset for a long-term uptrend to take out this high and get continuation on our next legitimate bull run. So there we have it on the weekly. Let's switch over to the monthly. This is like not that reliable on crypto, not that useful on crypto, just because it hasn't been around that long. But essentially, we got our monthly close right here. We got our next monthly close, the highest monthly close we've ever gotten. So is it unrealistic to think that we would sell back off just like we did right here and then potentially find support and continue up? Not at all. And that takes us down to that $7,000 range. Would be the same as getting caught up on the 50-55, and then continuation. Once we've taken out this previous high, we're essentially in a blue sky breakout. So that's what we're looking for. We are in the bullish control zone right now, but we could potentially get rejected from this area and then get a move back down, find support, and then move back to the upside. So we would put in a low, a higher low, and then another higher low, and then take out the top here. Once again, on the parabolic SAR, we are at, on the TJD TD MACD, we are at very high levels, where in the past we had previously saw this massive sell-off. That was the all-time high previously. We're at that same level right now. So is it unrealistic to think that we could double top here temporarily, pull back, find strength, and then get continuation? Not at all. Not at all. Because what happens a lot of times, and we've talked about this many times, with crypto, with traditional markets, with everything, what happens is we'll take out the previous high, get everyone extremely bullish on this asset, flip the trend over to a long-term bull trend or bull run, and then everybody buys in at the last minute at the top, and then you sell back off. Smart money sells into that pump and then reaccumulates at lower prices. So based on Fibonacci's, based on moving averages, based on all these indicators, based on all the oscillators, the divergences, everything we've been taking a look at, this is a very high likelihood area that basically is telling us we're about to go into a long-term uptrend, but we could potentially see our retracement happening at any moment here, and a violent one nonetheless. So that's what I'm looking for. I'm not looking to buy any more crypto in these areas. It's definitely possible that we get continuation to the upside. We're essentially putting in some triangle patterns here, which have targets up into the $22,000 and $23,000 range, like we talked about. But I do not think, not for a second, that we're just going to shoot up to 100,000 or 250,000 or anything like that. Is that going to happen in 2021? Potentially. 2022, 2023? Yes. I mean, I definitely think there is possibility for us to hit, six-figure Bitcoin. 100% think that's a possibility. Altcoins can 10 to 100x some of them. But right now is not the time to buy. Right now, what we're looking for is a sell-off followed by a higher low, accumulation, and then the push to the upside. Exactly like what happened with gold. We moved all the way back up, took out the all-time high, sold off a respectable amount, and keep in mind gold is not that volatile, sold off a respectable amount, and then consolidate, and then potentially push back up to the upside. Is it possible that we double top and get a violent sell-off and that was it for the trend? Definitely. We could go back into a bear market for multiple years from now. Lots of factors. Regulation, economy, anything could happen. Okay? But based on all the things that we've seen, all the situations we've been laying out over the last few months, over the last 6 months, this whole year, since I started this channel, we have done everything that I asked for to be in a legitimate bull run, a legitimate, not just a bull rally, not just a bullish move, a bullish pump. I'm talking about an actual bull run. We've done all the criteria I needed to get long-term bullish on crypto. Now the last thing we need to do is have that sell-off so that we can accumulate in the same way that smart money always accumulates when these things happen. Because dumb money buys the tops when we get the final signal. Smart money sells into that and then accumulates more at a lower price for the big long-term trending move to the upside. And with everything going on right now, I think liquidity and solvency is going to be key with these markets and other markets, and just survival over the next couple of years, depending what happens with the economy, with quantitative easing, with presidency, with all the different stuff that's going on right now, CV, all this stuff. Okay, the best case scenario is to accumulate at a great price in a long-term market that is headed to the upside. So that's what I'm expecting to happen right now. That's what I'm looking for to happen right now. I don't want to get y'all pumped up, overly bullish right now. I'm trying myself not to get overly bullish right now, but we have met all the criteria that I have, and judging by what I've seen in these markets, other markets, traditional markets, smart money, all this stuff, what tends to happen is we tend to get one more violent sell-off or retracement or whatever you want to call it. So let's jump over now and look at that 4 hour. We were talking about this Adam and Eve potentially playing out. That's still 100% in play. You never know exactly how this thing's going to shape up, what it's going to look like. But essentially, this is all we're looking at. We're just looking at this same pattern, just waiting to play out. We have this pointy top right here. We have a rounding top right here. Okay, at some point in time, it comes back down to the neckline here, finds support once again, and then we get the violent sell-off. We got the measure move out of the triangle, found support. We got the measure move back up, the break of the neckline like we were talking about, and now we're finding support before the bearish divergence all plays out and we come back down to that 16,550 range. So that's exactly what we're looking for. On the VPCI, we're crossing back to the downside. I spoke about how these green dots were the best place to accumulate, best place to accumulate, best place to accumulate. We spoke about how the on balance volume, that was the best places to accumulate, was when it flipped over red, flipped over red, flipped over red. Now look, you don't want to just get stuck in that position because we flipped it over. We could just as easily flip back down to the downside and do this over again and top out this trend before we get that final next big push up. So that's what we're looking for. And then once again, same thing with the water tar explosion. We got that big volume came in, calling out the bottom here. We got the big volume come in, calling out the top here. We got the big volume come in, calling out the bottom here. And now this is potentially that same set of volume spikes that's calling out each one of these ranges as well for our top right here. So we'd sell back off, get another big volume spike, and that would be our red coming in here, another move up, followed by our move down. So these markets don't ever go straight up. They don't ever go straight down. Crypto is moving in big numbers, big percentages. There's tons of gains to be made, but you need to make sure you're using actual technical analysis, not just buying into fundamentals, not just FOMOing into the top. I mean, again, it's not financial advice. I'm not your financial advisor, but that's what I'm doing. And then once again on the knife, came down here, knife called out the bottom with this knife sticking out here, knife called out the top with the knife sticking out right here, and now look, we're back underneath it now, and the slope is turning yellow, and we're getting ready to sell off back down to the downside. We could get a little move like this and then continuation, but based on the levels we're at right now, this corresponds with tops. I mean, we could get one of these crazy tops like this, but it's very unlikely. It's more likely that we're going to get one of these like medium tops right here, and that's going to call the top for this move right here. We get that consolidation, we get a big one out to the bottom, and then we get a move up. And then once again, looking at the Bellina Assassina, you'll see we are in the bullish control zone, getting ready to cross back down to the downside. The blue is getting ready to cross down below the purple. We could bounce this slightly right here, put in that final stab of divergence on the daily like we talked about, or we could just as easily sell off and get continuation. And based on the daily crossed over negative right here. The orange went below the white. This is our 4 hour. The blue is getting ready to go below the purple. So there we have it on that one. And then one more time, let's flip over here again. Take a look at Ethereum. Ethereum, we have two histograms on the TJD, TD MACD. We came back up, didn't quite get back to the top of this pattern. I was hoping to get back up to that 1650 range, but we made it up pretty high. We got our crosses back over on our moving averages, but it looks like we're losing strength already, getting ready to sell back down and touch this bottom trend line once again. And then at that point in time, potentially get that measure move. And then once again here as well, we're getting the hard signal. We're in the bullish control zone. We're losing strength. The RSI is losing strength, coming back down to the EMA. It's looking like potential come back down, either retest and then that move back up, put in that last level of divergence, and then potentially get a sell-off or a break to the upside. Or, in this case, if we got that measure move out of this area, we were talking about the measure move of this first triangle was massive, but now it looks like we're putting in obviously this larger triangle right here, which this is an ascending triangle. This is bearish. I'm sorry, bullish, because we have a flat top, essentially a sell wall that we're picking away at, and then we're putting in higher lows right here. But a lot of times what will happen is these will be big fake outs. They'll paint them clear as day, and then we'll get that slingshot up just outside of it, get a higher close, everybody FOMOs in, and then we can get the massive move, the dump out of this zone. And if we were going to get, for this larger pattern, if we were going to get a sell-off, somewhere in this range, we would be looking at essentially down here to like 459. So like I was saying, below $500 is my next target on Ethereum. I think we're going well below 500 very near future. It could pop out up here to 625 or so, 630, 640, anywhere up there. But I think we're just as quickly going back down to like the 460 range. So, well, there you have it, guys. Just wanted to do a quick update on Bitcoin. Let's take a look at dominance as well. Bitcoin dominance, we were talking about, we found support above the 200s, and we're slowly creeping up. So two things that would make Bitcoin dominance go up right now: if the alts sell off, but Bitcoin sells off less. So the alts sell off fast and Bitcoin sells off slow. Or if Bitcoin breaks out right here and moves up, and the alts, move up but not as fast. Now, potentially what could happen, all of a sudden the altcoins go on a massive run and the dominance drops down here. But again, as long as we're above these 200 moving averages, as long as we have a slope to the upside on the exponential, and we're starting to roll back over for the first time the slope to the upside on the simple, which is the darker blue one right here, we're starting to roll that back over to the upside. That tells me that the likelihood is that we're going to see a move back up on Bitcoin dominance. And then finally, total market cap looks very much like Bitcoin. We're essentially putting in this triangle at the top of the range. We avoided the cross to the downside right here, but we are failing to make higher highs. We are below the slope line right here, and it's flipped over red now. We are getting red sell-off on the Stoch slope as well. So again, we could push back up here, take out this high, and put in a third level of divergence. So that's what we're paying attention to. We have this high right here, which corresponds with a high on the price action. Price action is a high right here, and then corresponds to the high on the indicator oscillator. Then we have a higher high or a medium high right now with a lower high right here. Okay, that's lower, this is higher. And then if we got one more pushback up here in market cap, got some people FOMO back in, put in a higher high, that would be a high, a medium high, and a highest high. This would be a high, a medium high, and then a lowest high. So we would essentially be getting, once again, 3 drives of bearish divergence on total crypto market cap, which would imply, again, violent sell-off. So there you have it, guys. Just a quick update on Bitcoin after the weekend. I hope everybody had a good one. Going to be a crazy day tomorrow with everything going on in the United States. This is a big Monday for us, so let's see how it all plays out. We're definitely getting some good news around the world with the CV, vaccination going around and everything, vaccine, definitely looking, potentially good. We will see how that translates to the markets. We will see how everything translates with the big Prez ordeal going on tomorrow. So a lot of excitement, a lot of volatility, lots of money to be made. But like we always say, protect your capital, ladies and gentlemen. We've had a massive move up. Profits are not real until they're realized. So there you have it, guys. Not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Crypto Trend Trader, and I'm out of here.